Welcome back, everyone. So today's video is on what if. So this questions come up all the time, and what if blah 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 blah. You fill in the blank. Any curiosity questions you have. So these three questions that come up all the time that I want to go over. So one is, what if I don't disclose all of my sales amount, right? If I do $1 million in sales, but I only want to show $500,000, what happens? What if I don't tell you exactly what my business is doing to save up on insurance? What if I don't get the building coverage for the right amount? So let's talk about those. So let's talk about the first one. What if I don't disclose all my sales? So first thing first, what happens at the end of year is a sales audit. Not every company does it, but a lot of companies are doing it. So if you are getting a sales audit, they have the right to ask you. If you don't disclose the sales, they'll probably non-renew you, or they will just make up a number and they'll just send you a premium. Okay. So it's always good to give the right amount on sales up front. Second thing that can happen if you don't give the right amount of sales is, at the time of the claim, it can have an impact on your business income coverage that you have. Okay. The third thing, if the insurance companies find out that you basically lied and you did not disclose the right amount of sales, it can have an impact on your claim as well. It just depends on how bad you're lying on that, right? If you're doing $3, $4, $5 million in sales and you're saying, oh, I'm only doing $500,000, that's not a oops type of thing, or my sales went up. So it's a huge gap right there between $500,000 versus a $5 million in sales. So how bad you're lying, it can have an impact at the time of the claim. Okay, what I tell customers is, doesn't matter how good the insurance company is, how good the reviews are. One thing you don't want to give an insurance company is a way out. If you give an insurance company a multi-million-dollar claim, insurance company will start looking at every single corner of your business. They're going to look at every single part of the application. They're going to look at what you told them at the time when they issued the policy. And they're doing this for several reasons. They want to understand everything about your business and what happened. At the same time, they want to know if you lied. So why give an insurance company a reason to get out of a claim? Second, what if I don't get the building coverage for the exact amount, right? So say you have a $3 million building, but you only want to insure it for $1 million. Well, that's not how it works. Insurance company wants you to insure your building for what they call replacement cost. Every building, every property has three different values. Okay. There's the replacement cost value, what it costs to replace the building, taking into labor costs, material costs for that time. Okay. Second thing is market value. What is some, crazy out of state person is willing to pay for your property? That's market, right? So if I have $1 billion and I want to buy a Honda Accord for $1 billion, it's my prerogative. I can do that. So if somebody's willing to pay you a crazy amount, that's called a market value. Okay. Third is what they call appraisal value, right? A lot of times you pay taxes on that. So in your houses, you'll see your appraisal value is usually pretty low, versus somebody else is willing to pay for that house versus what it will cost to replace the house at the time of a claim. So if you don't get the right coverage for your building at the when you buy the policy, a couple of things can happen. When a claim does occur, you will get with hit penalties, and you will not get replacement cost coverage. Even though if your insurance company says that, hey, we're covering this building for replacement cost, there's also in the verbiage on those 300 pages document that you get, says that, hey, you have to cover the building at replacement cost. And if you don't have a replacement cost, they hit you with penalties. At the same time, they will say, we're going to pay you for actual cash value. There's a huge difference between actual cash value and replacement cost. So keep that in mind. Replacement cost coverage always pays more versus actual cash value. We could go into details how they come up with this amount and everything else, but just for keeping it simple, replacement cost is always better. The other thing is, what if I don't disclose what my business is doing, right? So I have this check cashing business on the side. that in the store, or I'm doing this other type of business that my primary insurance company does not really know about. So what can happen, right? You got to remember, your insurance company is basing your premium on what you're telling them. If you're going to lie to them and you're not going to tell them about this particular risk, so for example, you're telling them, hey, this is just a grocery store, but you have a full-fledged restaurant running inside and a meat market. Well, then if you have a claim that occurs, well, that you just gave a company a reason to back out of that claim. So it's always good to disclose all your businesses. And if you're going to lie on the application, again, companies will find out at the time of the claim. How did it happen? What was going on? If they haven't come and done an inspection in your building when they issued the policy, they surely will. If there is somebody who is paralyzed or somebody who died, right? They're going to come and look at your business, see what you're doing, how you're doing it, what's going on, what does your policy say versus what your business is actually doing. You know, this happens with smoke shops quite a bit. A lot of times there's CBDs and there's a lot of stuff that's not covered in the policy, but you're going to tell them, oh, I don't have any of that stuff, but you actually do. Again, that's just grounds for denying a claim. So keep all these what's if questions in mind and ask your client, your agent, hey, what can happen if I do this? Because if you have a good agent, he'll tell you what can happen. And it's not worth it, guys. To be honest with you, you have a multi-million-dollar business that pays for your house, that pays for your kids' education, that puts food on your table. So why do you want to risk it for a couple $100? So keep that in mind. It's always good to disclose all your information to your agent at the time you're buying the policy. Thank you, and have a nice day.